So friends, let's continue in this session about residential status. Now going ahead and checking residential status of HUF. I know that at your level mainly you have individuals, but still they have given you in your syllabus determining residential status of HUF basics. HUF also, firm also, and companies also, but very basics. So HUF can be resident or non-resident. Further, it can be not ordinary resident or ordinary resident. So same like individual. But how to decide? So you will check the control and management of the business operations. If that is 100% outside India, then status is non-resident. If even some activity is happening in India, even 1% activity, then status is resident. So more inclination towards declaring them as residents. If resident, then you have to check ordinary or not ordinary. To check that, you have to check status, or you can say you have to check additional conditions of Karta of HUF. Karta means the one who is main family head of that HUF. You have to check his additional conditions. If he satisfies both additional conditions, then ordinary resident. If it does not satisfy even one of the additional condition, then not ordinary resident. So, but when does Karta's role come into picture to decide status of HUF? After deciding whether HUF is resident or non-resident, first check control and management of HUF. If that is outside India, then directly non-resident. Don't even go to Karta's status, Karta's additional condition. Karta's additional condition will come into picture only if status of HUF is resident. That means only if at least some part of control and management is in India. So go ahead, complete this. Give the heading in your provisions and concepts book that determining residential status of Hindu undivided family. Determining residential status of Hindu undivided family. It will get divided in two parts: resident, non-resident. If resident, control and management wholly or partly in India, then it will be resident. Otherwise, it is non-resident. See, control and management even partly in India is okay. That will make it resident. If resident, then it can be ROR or it can be RNOR. When it will be ROR, if Karta of that HUF satisfies both the additional conditions. You know which additional conditions? 2 out of 10 years resident and 730 days or more out of last 7 years the stay is in India. Tell me once it is done. Till what point have you completed? Zoom further. Shall we go ahead? There is one question based on this. We'll do that question. Question number 3. Illustration 3. All of you there? Illustration 3. Business of HUF is transacted from Australia, and even decisions are taken there. All 100% policy decisions are taken there. So what is the hint? Control and management is outside India 100%. So status of HUF is non-resident. The end. The end. Status of HUF is non-resident. Mr. E. Kartoff HUF, who was born in Kolkata, visits India during PY 23-24 after 15 years. Okay. He comes to India on 1st April 23 and leaves for Australia on 1st December 23. There are two questions asked. One is you have to decide residential status of E. So what will be status of Mr. E? And then HUF. HUF status we understood. It is non-resident. What about E? Separate question. E's status. So check E's number of days stay in India in 23-24. Don't take it for granted. April 30 days. Yes or no? May 31 days. Feb, use your calci. June, sorry. April done, May done, June 30 days. July 31 days. August 31 days. September 30 days. October 31 days. November 30 days. And December 1 day. So how many days? 245 days. Means he is satisfying condition of being in India for 182 days or more during PY 23-24. So for sure he is resident. But he is not satisfying any of the additional conditions. Why? Because it is said that visits India after 15 years. Means last 7 years his stay is not 730 days or more, and even is not resident for 2 out of last 10 years. So his status is resident but not ordinary resident. And HUF is non-resident. So write down. First writing for that individual. 245 days you had calculated, right? So he is resident. But it does not satisfy additional conditions. So his statuses are NOR. Statuses are NOR, resident but not ordinary resident. See, from tomorrow, whatever sums we will do, they will be assuming Status is ROR. Means whatever salary, HP, PGBP, capital gain, IFOS, we will calculate. Our status will be ROR. So unless anything given in the question, status will be assumed as ROR. You must be doing this in practice book. And HUF status provisions you must have written in provisions and concepts notebook. Shall we go ahead? For presenting B part. B part was they were asking you status of HUF. So since business of HUF is transacted from Australia and policy decisions are taken there, control and management 100% is outside India. And so status in India is non-resident. So complete this. Of course, in this session, we will complete this topic and we can call it off a day. We can take leave after that. But tomorrow be prepared. And tomorrow come at dot 8. Today we couldn't start because I knew this situation. But I came to know about this situation in morning only. So I couldn't change your timings also. Shall we? Have you? May I? Shall we go ahead? Have you done? May I start with two things we have to do now? Deciding residential status for firm and then for company. But more of company you will learn at final level. Here introduction is given. See, firm or anyone who is, you know, artificial person. How to decide their residential status? Only two possibilities. Even if 1% of control and management is in India, then it becomes resident. But if 100% control is outside India, it becomes non-resident. Only two status. No further bifurcation. Huh. No further bifurcation between ordinary, not ordinary. That's it. So they will not ask you such questions usually. Usually interested in individuals only. Soon we will start doing RTP, MTP questions also. Like I had given you super sums for GST, I will give you super sums for income tax also. And if even if we complete the topic in this session, it doesn't mean complete. We will keep on doing practice questions. So for firms, local authorities, artificial juridical person, it will be resident if control and management is either wholly or partly in India. Even partly in India will do. And non-resident if wholly outside India. So it is difficult for them to become an NR. Local authority means municipal authority. Ah, exactly. So it is impossible that it will be NR. It will always be resident only. Can we go to companies? Okay. See, companies, Indian companies will have to be resident in India. Indian companies means incorporated in India. So those companies incorporated in India will be resident. But even foreign company can become resident. How? When? Why? You know that if we shift the residential status outside India, then there are a lot of benefits. What benefits? Global income will not become taxable in India. So as a company also I would be interested that my status is NR. So what people started doing is they started incorporating companies in foreign but doing business in and taking decisions in India. So shell company outside India. Shell means bogus, but its main activities are from India. Why have incorporated outside India? So that I can show my status as NR for that company. So government said, wait, what we will do? We will start calling foreign companies also resident only. If they are having some effective place of management in India. So what is that effective place of management or POEM, place of effective management? We will learn that at final level. But what has to be understood right now, even foreign companies, sorry, Even foreign companies may be declared as what? Resident assessees. So in short, net of calling companies as resident has increased. Okay, it has become wide. The scope has become wide. Foreign company having poem in India at any point of time during the PY will be called as resident. And those companies which can't be called as residents will by default become non-resident. So every company incorporated in India by default is a resident, and even foreign company can become resident if its place of effective management is in India. That's it. So complete this. All other foreign companies, all other foreign companies will be what? Will be non-resident. Complete this. That's it. All things to be learnt in this topic are done. One practice problem with about 2021 entries we will do now. And then we can, for time being, conclude this topic. Place of effective management in India for foreign company. Then that foreign company will also be called as resident. Don't check anything for Indian company. Indian company will always be resident. So if this is done, go to that master question. Shall we go to that master question? So in your problems book, we will solve this. Illustration 4. Literally count, it has so many adjustments. Some of them I will have to tell you. Most of them you will be able to do. Let's discuss. What are they asking you? What are they asking you? Compute total income means taxable income. In whose hands? Individual whose age is 35. Being, who is that? That individual is a resident, ordinary resident, or he is a resident but not ordinary resident, or he is a non-resident. In all these three situations. So three different cases. In short, you will do three different workings. But right now, how we will do? Particulars. If he is ROR, if he is RNOR, if he is NR. That way. Okay, so how your working will be? Computation of total income of individual for AY 24-25 relevant to PY 23-24. Particulars, if he is ROR, if he is RNOR, if he is NR. It's like we are doing for three different assessees. So tell me, for example, first point, interest on UK development bonds means income is arising outside India. It is not Indian income. But 50% of interest is received in India. So 50% will be taxable in all three cases. Taxable, taxable, taxable. So taxable, taxable, taxable will be 5,000, 5,000, 5,000. But one person is always Bakra. Who is that? Resident, ordinary resident. So in his hands, full 10,000. Because income of another 5,000, which is neither arising in India nor received in India, but it will be taxable in hands of ROR. Check your fourth point in the scope of income. Fourth point was income neither received in India nor arising in India, taxable, not taxable, not taxable. So for one person, always taxable. That is ROR. So let's do its presentation. Same way, we have to do other 20 items. So automatically, you will understand these provisions. So give the heading. Illustration 4, computation of, in your practice notebook, illustration 4, computation of total income for individual, assuming computation of total income of individual, assuming he is ROR, NOR, NR. For the AY, for the AY 24-25 in bracket relevant to PY 23-24, relevant to PY 23-24. All of you, particulars, if he is ROR, if he is NOR, if he is NR. Please make these columns. Did you make these columns? Particulars, if he is ROR, if he is NOR, if he is NR. Figures in rupees. All of you, figures in rupees. Like this, figures in rupees. A point, interest on UK development bonds, 50% received in India. Interest on UK development bonds, 50% received in India. Did you write the point like this? Interest on UK development bonds, 50% received in India. In bracket, write down, interest element received in India shall be taxable in all three cases. Interest element received in India shall be taxable in all three cases. Interest element received in India shall be taxable in all three cases. Okay. Full stop. Continue. In bracket only, continue. However, balance 50% will be taxable only in hands of, balance 50% will be taxable only in hands of what? Balance 50% will be taxable only in hands of what? ROR. ROR, as it is neither received in India nor arising in India. as it is neither received in India nor arising in India. Close the bracket. As it is neither received in India nor arising in India. Close the bracket. 10,000, 5,000, 5,000. All of you? 10,000, 5,000, 5,000. Done. How did you get first 10,000? 5,000 plus 5,000. Next. All of you observe second point. Tell me, what do you catch in the second point? Income from business in Chennai. You will catch this point. Business in Chennai means business in India means arising in India. So tax, tax, tax. It is irrelevant that 50% only is received in India. It is taxable in all three cases. So write down income from business in Chennai. You all will write income from business in Chennai. In bracket you will write income from business in Chennai. In bracket you will write since income is arising in India. Since income is arising in India. Since income is arising in India, comma, it shall be taxable. Since income is arising in India, comma, it shall be taxable in all three cases. So please tax 20,000, 20,000, 20,000. Did you take 20,000, 20,000, 20,000? Can I go to next point? Yes. Please, next point. Understand and tell me short-term capital gains on sale of shares of Indian company. What it means? Arising in India. So tax in all three cases. Doesn't matter it is received in London. Getting it? Doesn't matter. See, either it should arise in India or it should be received in India. If anything happens, it's taxable in all three cases. So tax, tax, tax. Write down. Short-term capital gains on sale of shares of Indian company. Short-term capital gains on sale of shares of Indian company. Okay, in bracket, please write down short-term capital gains on sale of shares of Indian company. In bracket, write down since it is income arising in India. Since it is income arising in India, comma, it shall be what? Since it is income arising in India, comma, it shall be taxable in all three cases. So please take 20,000, 20,000, 20,000. Don't be shy. Take 20,000, 20,000, 20,000. Next, fourth point. You tell me what will happen with fourth point. Dividend from British company and also received in London. One person will always pay tax. Don't forget that person. ROR. So write down. Dividend from British company received in London. Dividend from British company received in London. Okay, in bracket, please write this income is neither received in India nor arising in India. This income is neither received in India nor arising in India. This income is neither received in India nor arising in India, comma, therefore, dash, therefore not taxable in either of the cases. Therefore not taxable in either of the cases. Sorry, my bad. Therefore not taxable in case of R, NOR and NR. Therefore not taxable for R, NOR and NR. So 5000 dash dash. All of you dash dash. 5000 dash dash. Next. LTCG, long term capital gain on sale of plant at Germany, but 50% of the gains are received in India. So similar to your first point, 20,000 will be taxable in all three cases, but another 50% which is not received in India, but still that will be taxable in hands of resident, ordinary resident. So write down long-term capital gains on sale of plant at Germany, comma, 50% of the gains received in India, 50% of the gains received in India, that is rupees 40,000 into 50%. That is rupees 40,000 into 50%. So what happens? Full stop, continue. Therefore, amount received in India taxable in all three cases. Therefore, amount received in India taxable in all three cases. Okay, full stop, continue. However, that 50% not received in India, however, that 50% not received in India and not arising in India, however, that 50% not received in India and even not what arising in India will be taxable in hands of, will be taxable only in hands of ROR, resident, ordinary resident. So friends, close the bracket. 40,000, 20,000, 20,000. Did you understand why people like to be non-resident? You will see highest taxation for ROR. Next, income received from business in Germany, but which is controlled from Delhi. So you know this 70,000 will be taxable in hands of ROR and RNOR because control is in India. But 40,000 is received in India. So that 40,000 will be taxable in all three. Means out of 70, 40 is taxable in all three cases. And complete 70 is taxable in ROR and RNOR. So it should be 70, 70 and 40. So write down income from business in Germany controlled from Delhi. Controlled from Delhi, comma, rupees 40,000 is received in India. Rupees 40,000 is received in India. Rupees 40,000 is received in India. Clear? Understood? Got it? Go to next line, open the bracket, write down, since business is controlled from India, since business is controlled from India, comma, entire 70,000 is taxable. Entire 70,000 is taxable in hands of ROR and NOR. Okay, full stop. However, only to the extent received in India is taxable. However, only to the extent received in India is taxable in hands of NR. So what are the figures? 70,000, 70,000, 40,000. Did you all get 70,000, 70,000 and 40,000? Next, profit from business in Delhi. See, business is in Delhi. The end. Tax, tax, tax. So write down, profit from business in Delhi. Profit from business in Delhi. In bracket write down, since income is arising in India. Since income is arising in India, it will be taxable in all three cases. So profit from business in Delhi, in bracket, since income is arising in India, it shall be taxable in all three cases. So please tax 15,000, 15,000, 15,000. Tell me once you get 15,000, 15,000, 15,000. All of you sure done, got it? Shall we go ahead? Next. Income from HP in London means arising in London. Deposited in bank at London means received in London. This doesn't matter whether it is transferred to India or not. This absolutely doesn't matter. This sentence doesn't matter. Brought to India. Whether it is brought to India or not doesn't matter. So who will pay the tax? And I mean, yes, only in one person's hand it will be income. So write down ROR, of course. So write down income from HP in London also received in London. Also received in London. Income from HP in London also received in London. Okay, so in bracket write down, it is income arising outside India and even received outside India. It is income arising outside India and even received outside India. And therefore taxable only in hands of. Therefore taxable only in hands of. Yes, resident, ordinary resident. Therefore taxable only in hands of resident, ordinary resident. Full stop. Continue. The fact that it is brought to India is immaterial. The fact that it is brought to India is immaterial for deciding scope of income. The fact that it is brought to India is immaterial for determining scope of income. So what will happen? 50,000 dash dash. All of you 50,000 dash dash. Next. Next. Income from debentures in an Indian company. What happens when I talk about Indian company? Arising in India. So taxable, taxable, taxable. So write down income on debentures in an Indian company. Income on debentures in an Indian company. In bracket write down arising in India. Therefore taxable in all three cases. Income on debentures in an Indian company. In bracket arising in India. Therefore taxable in all three cases. So can you tax 12,000, 12,000, 12,000? The scope of income means in whose income it will be included, in whose income it will be excluded. That is the meaning of scope of income. Next, fees for technical services rendered in India means services are performed in India. So it is arising in India. So taxable in all three cases. So write down fees for technical services rendered in India. Fees for technical services rendered in India means that services performed in India. Fees for technical services rendered in India. In bracket write down since since services are rendered in India, since services are rendered in India, comma, the income is said to be arising in India. The income is said to be arising in India. The income is said to be arising in India. Full stop. Therefore, taxable in all three cases. Therefore, taxable in all three cases. So how much? 8,000, 8,000, 8,000. All of you? 8,000, 8,000, 8,000. Next is repetitive point now. Profit from business in Mumbai means arising in India. Tax, tax, tax. So write down profit from business in Mumbai. In bracket, since income is arising in India, it will be taxable in all three cases. Profit from business in Mumbai. In bracket, you will write since income is arising in India, comma, it will be taxable in all three cases. Did you take it? Taxable in all three cases. Did you get 26,000, 26,000, 26,000? All of you? Next. Income from property in Nepal received there. Nothing is happening in India. Taxable only in hands of ROR. So write down. Income from property in Nepal received in Nepal. Income from property in Nepal received in Nepal. In bracket you will write here income is neither arising in India nor received in India. comma, taxable only in the hands of resident and ordinary resident. Taxable only in the hands of resident, ordinary resident. So 16,000 dash dash. Shall we go ahead? Next. So did you take 16,000 dash dash? Next. Past foreign untaxed income. Past means past PY. Not taxable in any of the case. See, for PY 23-24 it cannot be taxed. So write down. See your heading. What heading you have given? Computation of total income for AY 24-25. So it's certainly not taxable for 24-25. That's why dash dash dash. So write down past foreign untaxed income brought to India during PY. Not taxable in any of the case. Not taxable in any of the case. So dash dash dash. Not taxable in any of the case. Not taxable in any of the case. All of you. Dash dash dash. Next. Income from agricultural land in Nepal. See, agri land in Nepal, actually agri income in India is exempt. But agri income from foreign is taxable. But you know only in whose hands? Because it is received there only. It doesn't matter brought to India. Taxable only in hands of the ROR. So write down. Income from agricultural land in Nepal received in Nepal. Income from agricultural land in Nepal received in Nepal. In bracket taxable only in the hands of ROR. Taxable only in the hands of ROR. Being income being income being income arising outside India and also received outside India. Being income arising outside India and also received outside India. So please take 18,000 dash dash. All of you. Next. Income from profession in Kenya, which was set up in India, received there, but spent in India. So basically only control is from India. So it is T, T and NT. Means in ROR and NOR it is taxable. NR it is not taxable. See, it is not income arising in India. It is income from profession controlled from India. Taxable, taxable, not taxable. So write down income from profession in Kenya means profession outside India but set up in India, comma received in Kenya. Spending is not material. income from profession in Kenya, set up in India, received in Kenya. Even if received was in India, we would have said taxable, taxable, taxable. But it is received also outside India. So in bracket write down, since it is from profession controlled from India, since it is from profession controlled from India, since it is from profession controlled from India, comma, it is taxable in hands of, yes, it is taxable in the hands of ROR and RNOR. So 5,000, 5,000 dash. Did all of you get 5,000, 5,000 dash? Next, gift on occasion of his wedding, own wedding, huh? You will learn this in income from other source, that this is not taxable in any of the case. Gift on occasion of marriage is not taxable, own marriage. So write down, gift on occasion of his wedding, gift on occasion of his wedding, in bracket, it is not taxable. No, no, no. Any gift on occasion of marriage is not taxable. You will learn this in section 56, other sources. A gift on occasion of marriage. In bracket write down, it is not taxable. So when it is not taxable, so even not taxable for an ROR. So dash dash dash. All of you dash dash dash. Next. Interest on saving deposit in SBI. SBI means arising in India. So taxable, taxable, taxable. So right, interest on saving bank deposit in India. Interest on saving bank deposit in India. In bracket you will write, since it is income arising in India. Since it is income arising in India, comma, it shall be what? Taxable in all three cases. Since it is income arising in India, it shall be taxable in all three cases. Please take 12,000, 12,000, 12,000. All of you 12,000, 12,000, 12,000. Next, income from business in Russia, controlled from Russia. Who will pay the tax? ROR. So write down, income from business in Russia, controlled from Russia. So in bracket, it is neither income arising in India nor received in India. It is income neither arising in India nor received in India, comma, taxable only in the hands of ROR. Taxable only in the hands of ROR. So 20,000 dash dash. All of you 20,000 dash dash. Second last point. Dividend from Reliance Petroleum Limited, Indian company. Means what? Indian company means arising in India. So taxable in all three cases. So write down, dividend from Reliance Petroleum Limited an Indian company dividend from Reliance Petroleum Limited, an Indian company in bracket, since it is income arising in India, it is taxable in all three cases. Since it is income arising in India, comma, it is taxable in all three cases. Since it is income arising in India, comma, it is taxable in all three cases. So can you please take 5,000, 5,000, 5,000? Can I go ahead to the last point? What is last point? What is last point? Agri income from land in Rajasthan. Agri income from any land in India is always fully exempt. You will learn that as we go ahead. So dash dash dash. Yes, write down. Agricultural income from land in Rajasthan. Agricultural income from land in Rajasthan. In bracket write down. Income derived from income derived from income derived from agricultural land in India. Underline that, in India. Income derived from agricultural land in India is fully exempt. Is fully exempt under section 10(1). Under section 10(1) of Income Tax Act. So dash dash dash. On your calces, please take the total and call it as gross total income. Don't do laziness. Take total, call it as gross total income and check. Take GTI in hands of ROR. Take GTI in hands of NOR and in hands of NR. Take that GTI. Check your GTI figures. Don't copy. Check your GTI figures. Check. You will get 3,52,000, 2,18,000 and 1,83,000 as your GTI. Next point you will not at all understand, but just copy it. You will understand it later when we go ahead in the syllabus. That is deduction of ATTTA. So just to give you information, for my interest on saving bank, I get deduction. So government says don't tax your interest on saving bank to the extent of 10,000 rupees. So your small interest on saving bank, don't tax it. So don't tax it to the extent of 10,000. How much you have received? Interest on SBI 12,000. But deduction cannot be 12. Deduction is restricted to 10,000. And it is not anything like that, that it is only for resident or anything. It is for all assessees. So 10,000 will be deduction in all the cases. So therefore, get your total income and tell me once you reach till total income. Total income should be 3,42,000, 2,08,000 and 1,73,000, isn't it? One note I will write. Any idea what note? We have taken deduction. Means we are paying tax as per old regime. If we want to pay as per 115 BAC, we cannot take this deduction. So write down note. Write down note. If you have taken the deduction and taken total income as 3,42,000, can you see highest for ROR and lowest for NR and somewhere in between for NOR? So can I say highest incidence of tax in hands of Bakra ROR, lowest in hands of NR? That's why people like to be NR. Write down note. We have assumed that we have assumed that we have assumed that SSC has opted out. We have assumed that SSC has opted out of section. Opted out. We have assumed that SSC has opted out of section 115 BAC of section 115 BAC and is paying tax as per old regime and is paying tax as per old regime and is paying tax as per old regime. Clear? Full stop. Continue. Therefore, deduction under section 80 TTA. Therefore, deduction under section 80 TTA is allowed. Clear? So, this completes your topic of residential status for time being. Of course, we will continue our practice. But for time being, we can say this topic is complete. From next session, that is tomorrow onwards, we will start with first head of income, that is your salary. Okay. So that's it. Thank you. Bye bye.